Hi, we are going to be looking at IAS 2 inventories based on the ICAN Pathfinder over here. So we're going to look at the first example here in order to determine the purchase cost, whereby purchase cost include import duty, delivery cost, everything all together gives us the cost of inventory. So in the nutshell, we are trying to arrive at the cost of inventory. What are those costs we are supposed to include on our inventory? Okay, so let's do that using QuickBooks. So first of all, based on the question, you can see Kaduna Consumer Electric. So you have to write this name first of all. This is Kaduna Consumer Electric's books that we are recording, and it buys goods from an overseas supplier. So we are going to create an overseas supplier here in QuickBooks. How do you go about it? I'll go to vendor here, vendor menu. So once you click on vendor menu, you go to vendor center. From vendor center, we are going to create a vendor. So look over here, you have new vendor, then you just click on vendor. So here I'm going to use ABC Limited as the overseas supplier. So we've created that. The next here is that KCE has recently taken delivery of 1000 units of component X. So it means component X would be used in an assembly to probably produce a finished goods. This is not a finished goods. This is a raw material. So in this case, we are going to record it in the form of raw material. Had it been is a finished goods, we would have used a separate or a different kind of way to record this transaction, but this is for a raw material. That's what they call it, component X. Of course, you don't sell components, you buy components to assemble. So let's go to QuickBooks. How do we go about that? We can go to vendor here and look at inventory center. From inventory activity, you see inventory center, or you click on list and you go to item list. You would still create your inventory from that angle. So now I want to create a new inventory item. So I'm clicking on new inventory item. You see it still takes us back to the same platform. Had it been we used list and item list. So here we are going to be dealing with inventory part because we want to track this component X that we are purchasing. So I'm going to name this quickly as a component X. Okay, so let me just copy that and paste here and paste here. Okay, it's already there, so let me just remove this component X. Now, as for the cost of goods sold account that I want to use to track this component X, we can use raw material. Since we are not selling these goods, we are using it for a production or for to build an assembly as a component. So we are going to select cost of goods sold, that is raw material. Similarly, if you come to the asset, this particular account will be used to track the inventory, so it is other current asset type. Then similarly, I'm going to select raw material inventory. So with these two informations, I'm good to go. Of course, we are not selling it, but we are required to select sales and income account. But why? That is done in our inventory, our preference. We can set that up in preference, but it's better we leave it, we set it up as required. Otherwise, we might just create an account and just go ahead and save without selecting an income account in case that account affects a particular income account. So it's better we just have that there. So we are not selling the component X, but it's fine. We can still sell it as far as there is no transaction that will be posted to this account. So let's go ahead and click on OK. Now we've created component X. So we've done two. We've created the vendor, the supplier versus supplier, and also component X. Now the next item here is now where we are going to create the bill, either bill or check. But in this case, if you look at the quoted price of component X was 1,200 per unit, but KC has negotiated a trade discount of 5% due to the size of the order. The supplier offers an early settlement discount. So with this statement alone, at least we know that this goods were bought on credit. So head back to QuickBooks or Excel. From Excel here, we will be able to see that the quantity order is 1,000. Price per unit is 1,200 as per the information that we just read now. Then which gives us a total of 12. That is 1,000 times 12. Then the discount is 5%. So that is 5% times D3, which is 12. So that gives us the discount amount. Of course, we're not going to create the item as 12 because there's a discount. So we did not actually pay the 12. We actually paid less the discount. So that's why we are calculating this discount here. Then the net now is 1,200 times 1,200,000 minus 60,000, which will now give us 1,140,000. But now we want to determine the unit price. So unit price, of course, would be 1,140, no longer 1,200. So this is how we arrive at our unit price. So we can see head back to QuickBooks and okay, we have it here. You can just put this information here. Okay, fine. Can also do that here. 1,140. So this is the cost. We are not selling this component X, right? We are using it as an assembly. So we might just likely leave here as 0. So click OK. Now you have your cost price 1,140. Now going to the next item here. Let's go ahead and make the order, right? We have import duties of 16 naira per unit. That is 16 naira. Of course, the solution is here, but we are trying to illustrate this using QuickBooks. And then we have a delivery cost of 5,000 altogether, not per altogether. Okay, so let's go ahead and write a bill. So we go to vendor and we enter bill. Remember, this is component, not a finished goods. And it being is a finished goods, there's the settings we have to set up before creating the bill, or this item we are creating. There's how we would set that up. So I'm going to select component X. Now you see automatically component S is here, and 1,000 quantities give us 1,140, which is same as this. The next we want to create import duty. These are charges. So let's go back to QuickBooks. We can create it right from here, or we just go to item list. So list and item list. You will see component X is also here. So you can find it here or in your inventory. So right click and new. So once you go to new, now we are going to select order charge. This is import duty. So I have to put that import duties. Now with this information here, we only have one box for amount, but I'm using this in assembly, so I have to check this box. This is where we would now have the information for purchase. So we enter our purchase information right here. Now, which expense account are we supposed to select? Now we have this import duty. We are supposed to have them as the expense account that we would use to track this import duty can go to other current asset. So we can have them as work in progress. So I can create a new and just name it work in progress. This will help us to track how much we've paid for the import duty. Then we would now assemble them together to give us the total cost for the assembly at the end of the day. So we are assuming we are building the assembly with just the component X, because it's a component, is a raw material, so it's not a finished goods. So we're using this pattern. So work in progress for not an expense. So let's go back to chart of account list, chart of account, and let's look for this account we just created, which is okay, let me go back to new item. Okay, it should be in expense, advertising, mobile. Oh, this is work in progress. So let's double click on that. Oh, that's the report. So right click and edit the account, right click and edit. Then here we select cost other current assets. Save and close. But we'll name it work in progress, of course. So now the next line of action is to go back to the new item, the item list, the new item I mean to say. Now we have work in progress as other current assets. Now sales account, you can just select sales account, but we are not posting anything to sales account. So I'm going to click next because we want to also go for delivery costs. Now for delivery costs, we would also do same. So I can decide to identify them by their name as delivery costs as other current assets, as import duty as other current assets, right? But I can just select the work in progress so that we have everything together for this work in progress. But it's also better, it's good for you to have them identified so that you know how much you've paid so far for import duty and how much. I think it's better we do that. So let's just go to add new. So I'm going to create another current asset type, this. Then we're going to have this as delivery cost, so we can see what we've done so far on delivery. So delivery cost, save and close. Then I'll go back to the import duty and also name it import duty. So double click on that, and this work in progress we're going to create, going to change it to import duty. So where is it again? So go to the last work in progress. Okay, just search. Okay, this is work in progress. So I will right click on that and edit. Then I'm going to name it import duties. Okay, save and close. Okay, now we go back to enter bill. So I'm going to select component X. We're also going to select import duty, which is the second line of action. There's 1000 per, that is 60 naira per unit, so that is 60,000. We're also going to select the last, which is delivery cost. So delivery cost is, the cost is 5,000. Of course, if you want to break it, it will be per 1,000, which will be 50,000. So let's just say for each of these 1,000, you're gonna have that 5,000. So it means it's 5 naira per unit, 5 naira per unit, 60 naira per unit for the import duty, then 1,140 per unit for the 1,000. So I think it's better we have it this way. So we can go ahead and save and close. Now once you save and close, we head to our report and let's see how this is reflected in our company and financial balance sheet standard. Now you see we have 5,000, just like how you have it here. You have 1,140, 1,140,000, 60,000, 5,000, all together give us 1.2. We can also track that in that format. 5,000, 60,000, then 1,140, all together giving us an account payable of 1,205,000, just like we have it here in our Pathfinder, ICAN, Pathfinder. So this is the information. This is how it is available for you for use. Now, you might decide that we can just stop here, right? This is just the information. This is the information in the but because we're actually going for the cost of raw material, we want to arrive at the cost of inventory. So we're going to use this. We're going to build an assembly so that everything will be perfectly fine, right? So let's go to QuickBooks. So we are not done because we want to identify the total cost. Now we'll go to list, item list. We have it here. Then Control N. So this time around, we are selecting inventory assembly because we want to build an assembly. So inventory assembly. This is it. So we just call this finished goods. Finished goods. Okay. This is finished goods. Now from this finished goods, we're going to select this component X, 1140 per quantity. So we're going to have this as 1. You can have it as 1. So we need 1 of this to build a finished goods. We've also divided the costs. So delivery cost here did not come with its cost. So we have to go back to, let's save this and go back to our item list. Okay, and just put just put an amount there. So let's just say 2,000. Just for the sake of okay, an income account. This is already a setting, so we are selecting sales, and the cost of goods sold account is cost of goods sold. So this would then the asset account is not raw material. The asset account has to be finished goods. So we don't have a finished goods here. So let's go and create a finished goods where we used to track this finished goods. So we're going to create other current asset, finished goods. Okay, this is better. So save and close. Then we'll go. Okay, we are coming back to this. So just want to edit. So we'll come back to delivery costs, just like we did here in our Excel. I think not in Excel, in the bill that we entered, we were able to differentiate. We were able to ascertain the cost per unit, right? Which is 5,000 divided by 1,000. So that is for delivery cost. So delivery cost is 5 naira, while import duty is 6 naira. So I'm going to go ahead to edit each of the items so that it will come together when I want to select them for inventory assembly. So delivery cost is 5 naira. Okay, then we're going to select import duty. Import duty is 60 naira. So we're going to have this as 60 naira. Then once you hit OK, then we'll go back to the component, the finished goods. So let's double click on that and let's continue with the adjustment with building the assembly. So you can see 5 naira is here. Then we select our import duty, also 6 naira. This is for 1 all of them, right? You can see the full view here. Our component X for 1. So let's say if we want to produce a particular finished goods, we need 1 of component X. We also need to identify the delivery cost that is associated with that component X, and we also need to go for the import duty for that component, 1 component X. So this is the total amount, 1,205 for the 1,000, which will still equal to 1,205,000. So click on OK, and this is the total cost. So 2,000 can be per build, or I can decide to enter a markup and say, okay, my markup should be 100%, right? So the cost is 1,205. The markup of 100% will give us 2,410. So let's say markup of 100% or 50%. So anyhow, or you can insert the amount yourself. You can decide to say, okay, I want to sell this for 2.5 after building this. Of course, we're not factoring in labor here and other items, but we'll do that. But in order to illustrate this particular example here, this is to illustrate this example here in QuickBooks. So we don't have labor. This is the information we're provided with, and that's what we are working with. So we'll go ahead and click on OK. We've not built the assembly. We are just selecting the items that we are going to use to build the assembly. So for now, you can see we still have 1000 component of X. And if you go to balance sheet, everything is still intact because we've not used anything from there. 5,000, 6,000, then 1,140,000. Okay, so let's go ahead and let's select vendor. Now we are going to inventory activity, then we build the assembly. Now in building assembly, we have to select the finished goods. This is what we use as our final goods. So you can see we have 1000 units. Maximum number you can build is 1000. Maximum is 1000. So if I use 1000 here, now we have 1000 of component X. Let's build the assembly. So let's refresh the report. Everything is now in our finished goods. Okay, so this is the right way to go about it, not 1. So it has to be 11. So everything now is in 1205. So there is no any expense for import duty, and there's no any expense for delivery. So let's assume we did 500, right? So let's go back to vendor and build assembly, inventory activities, then we'll build assembly, then we'll go previous. So let's say we are building 500. You see that those amounts will still remain, but half of them. So let's check, refresh the report again, see the effects of this transaction. Now you see half of 5,000 is 2.5. Half of 1,140,000 is 570. We still have raw material. Then half of 60,000 is standard, but then we have our finished goods 602,500 naira. But all in all, we still have account payable of 1,205,000. So this is how we record this based on what we have on our Pathfinder here in the ICAN Pathfinder. Hope you find this useful. If you find it useful, please subscribe to my YouTube channel, like my video, you can share the video too, and don't forget to turn on your notifications so that you get notified whenever I make new videos.